bring in Doug Cliggott right now. He's a U.S. equity strategist for Credit Suisse. Doug, before we talk about the broader markets, what do you make of something like this? Buffett coming in through Berkshire Hathaway to give a little injection to Bank of America.
Well, Deirdre, I think, Warren Buffett's time horizon is a very, very long one, and I think he's making a judgment call about future growth. I don't think it really tells us a lot about the next 6 months, the next 12 months. It's just his perception that there was an extraordinary value created there.
And Doug, I mean, to your point, we are seeing, and Adam made it as well. I mean, I'm just looking right now at some of the trades, $6.99, now trading at $8.62, so a huge move up. Buffett really giving his vote of confidence to this company, and as you say, a value play and a longer-term play. What do you make of the financials, though, in general? Because we've been talking about this group. It is the most beaten-down group year-to-date if you look at all the sectors in the S&P 500, and a lot of people are saying, look, bank stocks will never trade the way that they were trading in the go-go 90s. We're going to go back to valuations, fair value, back to the 80s. What do you make of that?
I think there's a powerful logic to that view, Deirdre, and I think, we'd look at financials a couple of different ways. First, where are we in the economic cycle? Where are we in the market cycle? You usually want to buy financial stocks when you're coming out of a recession, very early in a cycle. We think we're very late in a cycle now, so sort of from a cycle rotation perspective, it's the wrong time. But more importantly, to your point, there's a really good chance that financial sector profits really don't grow very much over the next 3 years, 5 years, 7 years. The heyday of financials, I think, may be behind us when we were all taking debt up at a very rapid rate. We're not going to be doing that for a long time.
Because, Doug, you implied it too. I mean, Warren Buffett is a patient man, right? So this is a longer-term play. I mean, the lending has to turn around. There's still so many regulatory concerns we don't know about. Something like 38 of the rules from Dodd-Frank have been written out of something like 238. A lot of unknowns still for this sector. What do you like, Doug, in this environment?
Well, our core portfolio is your classic defensive sectors, but I think the themes we're looking for, we want solid balance sheets, we want companies with a global footprint, we want companies that have stable businesses, and maybe the most important, companies that are paying a very healthy dividend yield. And so companies that you can have confidence that they're going to continue to pay a good dividend yield, even if growth slows down quite a bit.